Hi, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, everyone, welcome back to another week in the crypto markets. If you have not been following the news, the Clarity Act was officially postponed last week until after summer recess, and they will be taking up this issue, I believe, and September 15th was the date. In other news, though, the SEC has now entered into this regulatory discussion. They will be putting forward rulemaking for Reg Crypto, with more info coming in the next few weeks and a meeting set on Friday to discuss some initial rules. Other than that, we are still at war with Iran. I think CPI came in flat today, not flat, but at estimates. And we are kind of just, peak summer right now in terms of what's going on in the market. So we will start, though, by talking about Movement Labs. So Movement Labs, which is a layer one protocol. They announced this last week, the launch of a new product where people are going to be able to send remittances through WhatsApp. So Movement said that they've partnered with El Vicino, a remittance provider, and Rise, a wallet provider, to create this new product. Movement's blockchain will act as the payment rails in this case for that. So the product is pretty basic. It just allows users to access remittances without a bank account or the need to go through a new app. And WhatsApp is obviously a familiar environment, especially for folks internationally. Initially, the app is going to target the US-Mexico remittance corridor, and later there are plans to expand to other corridors such as El Salvador and Guatemala. The Move token, though, it's been weighing heavily. It's been weighed down recently. It is down 17% for the week. Okay, next up we have CRO. So last week, Trump Media and Technology Group announced that they were actually going to be pulling back from a partnership with the crypto exchange Crypto.com. So the proposed partnership was to set up a digital asset treasury company to support Crypto.com's Kronos blockchain and its CRO token. So for those who aren't familiar with Crypto.com, you might have seen them. They are literally on what used to be the Staples Center in Los Angeles, now the Crypto.com arena. They are one of the large crypto exchanges out there. So they have for a while had their own token and blockchain to accompany it. So basically, as part of this deal, Trump Media would have lent its name to the company, which would have sought to accumulate CRO tokens and generate additional yield from those holdings. So market conditions in digital assets and just in general have really kind of soured the market on digital asset treasury companies. And this is kind of cited as one of the reasons for shelving that endeavor. So in addition to this, though, there were also plans to create a prediction market on Truth Social, and those have also been scaled back. Today, Crypto.com, though, did announce that they're launching tokenized equity derivatives for users in specific jurisdictions. And doing so, they are joining a large cohort of crypto exchanges that are offering their users exposure to stocks. The CRO token is down 14% this week. Okay, next up we have Jupiter. So on Monday, Jupiter, which is the largest you can think of DeFi app on Solana, launched V2 of their lending product. So the most important kind of new feature is basically that the V2 allows users to use positions that are deposited or borrowed in the lending product simultaneously as being used in trading liquidity or as a liquidity provider. So basically, Jupiter has the main product is their DEX aggregator product. And remember, decentralized exchanges kind of allow anybody to market make and provide liquidity into different trading pools in these different exchanges. On the other side, Jupiter did successfully several months ago, or I believe maybe it was a year ago, start their lending portion of the business. They used the architecture and code based from Fluid, which is an Ethereum and EVM based lend borrow project that also offers a DEX for other purposes underneath. So this is a kind of cool product because it basically allows for greater capital efficiency. Because say you can basically say, okay, my trading, what I'm offering as liquidity can also be used in the lend borrow, either borrowed or deposited into the protocol to earn additional yield. They basically can offer this though because they operate this very large DEX aggregator in the Solana ecosystem. But there are kind of some limits to what they call a smart collateral feature, is that they are only allowing stablecoin and staked SOL pairs to kind of avoid any overly volatile assets, since that would lead to liquidations and all kinds of other issues with managing liquidity. Jupiter Lend currently has about $1.7 billion in deposits and $827 million in outstanding loans, representing about 3% of the overall lending sector. They come in second behind Camino as the largest decentralized lending protocol by outstanding loans. Jupiter, though, has not been immune from the market malaise. It is down 10% for the week. Okay, last up, I'm going to talk about Bitcoin because they had some pretty interesting things going on this week with it. But Bitcoin has experienced a lot of drama among its core team this past week. The big thing is that there was a proposal to essentially reduce network spam called BIP 110. This actually failed to receive enough support to activate on the network. The proposal was basically designed to temporarily restrict how much non-payment data, you can think of that as ordinals, inscriptions, images, any other data that is not, hey, I'm sending one Bitcoin from this address to the other. Basically, they were trying to reduce the amount, restrict how much of that data could be included in Bitcoin blocks, because a lot of people think of it as spam or it can congest the network more. So if you recall, or if you don't know much about Bitcoin, it actually lacks formal governance. So to push through any software upgrades, it's not voted on by like the holders of Bitcoin or like a central governing body. It basically has to be adopted by a majority of network nodes, aka the miners, to go live. So if less than 55% of the network adopts the update, the network ends up creating a fork, which creates essentially a new version of the chain. So this is basically what happened with BIP 110. The software update went live on August 8th last week. But after achieving support from only 2.5% of nodes, it broke away and became its own chain. The new network stalled after producing 2 blocks, and it's now over like 300 blocks behind the Bitcoin network, essentially becoming a failed chain. So following this failure of a software upgrade, the Bitcoin Improvement Proposal editor, Luke Daster, was forcibly removed from his role by other BIP editors. So Daster was heavily involved in this proposal, and his ousting was a direct result of the failed proposal, although the other editors cited other issues in his performance as a reason to oust him from the position. Despite this, the network does continue to run smoothly, but another hard fork is scheduled for the end of August. This hard fork is called eCash, totally unrelated to the current upgrade that just came out. The goal with this one is it's going to create a version of Bitcoin that allows sidechains and reassigns some of the Satoshi era dormant coins to investors and developers of this product. This has been not a very popular fork based on how they're handling the tokens. And that, like I said, it's going live at the end of this month. Bitcoin, though, it's down 2.4% for the week. All right, guys. I hope you, that's all we have for this week. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.